Turnover rate is the ratio of the trading volume of the day over the total outstanding shares. For example, a share has a trading volume of 20 million shares today, while the amount of the total outstanding shares are 100 millions. The turnover rate in this case will be 20%. Turnover rate reflects the liquidity of a share and also tell us which shares are the ones that the investors are giving a lot of attention to. Different range of turnover rate give us different signal for trading. Usually, most of the shares will have a turnover rate between 1 to 2.5%, excluding those that just got listed. The higher is the turnover rate of a share, the more active is the share, which indicates that people are more willing to buy that particular share. Also, high turnover rate indicates that the share is with high liquidity. The situation where we are unable to buy or sell the share can hardly happen. But do take note that high turnover rate also indicates that the share is something that the short-term capital are chasing after. The volatility is higher and of course, the risk is also higher. Now, let's take a look at point number 1. If a share is with 3 to 5% turnover rate, it indicates that the share is relatively active. There might be some big boys collecting the shares, especially when the share price is at the bottom point. So, we can start to keep an eye on these shares and wait for a great entry point. When both the trading volume and the turnover rate increase, it is an obvious signal that there are large cash inflow into the share. We can then make entry to join the upcoming uptrend. Number 2, turnover rate in the range of 8 to 15%. That's the characteristic of a share with strong momentum. The share is active and focused a lot by the market. The share price will usually move up as the cash inflow continues. If the turnover rate goes above 15% for a couple of days continuously, the share price is likely to be doubled or even higher. Number 3, turnover rate exceeds 25%, indicates that the big boys of stock market are liquidating their position in this share. If it occurs at a high point of the share price and it comes with a large bearish candlestick, it can be confirmed as an exit signal. Usually, the big boys will come out with some positive news to create a demand in the share, so that it will be much easier for them to liquidate their shares. Number 4, turnover rate above 70%. This usually happens only the newly listed shares. It's a signal that the big boys are clearing their holdings. The possibility of a sharp fall is very high. If you happen to be holding the shares, you should sell them without any hesitation to avoid further loss. Number 5, this is very important, yet many investors do not know about it. When a share has its turnover rates above 50%, then stay around 20% for this. It indicates that the share price can continue to rise. We should continue to hold the shares if we happen to have bought any of them. During the application of turnover rate, we must observe how long does the rate last for. Because the shares with a high turnover rate that lasts for long will be a better choice when it comes to our stock selection. Those shares that come with high turnover rate which lasts for only a day or two, we better forget about them and it's very likely to be a bid by the big boys of stock market. It is the best if we manage to spot the shares with high turnover rate but the share price rise slowly and steadily, especially the ones with the moving average lines in sequence. For this kind of shares, once the trading volume increases or the OBV line goes up in advance, the share price is very likely to soar and we will be able to make a good profit.